Business News, where news for business people.
Hello and welcome. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. These are the top headlines that we're tracking at this hour. Markets set to end the year on a steady note. The Nifty trades above the 10,500 mark. India's fiscal worries continue as deficit for April to November period widens to 112% of its FY18 target. It's another double-digit surge for Reliance Communications after Jio agrees to buy its spectrum and other telecom infrastructure assets. The government links virtual currencies to Ponzi schemes, reiterates that none of them are legal tender and have no protection in India.
Better late than never, but a lot of warnings coming in for some of those cryptocurrencies as well, though we're not saying whether they're overvalued or undervalued. But thanks for tuning in to Countdown right here on Bloomberg Quint. I'm Neeraj Shah, and the markets, not a bad day, quite frankly, 1/3% on the last trading day of the current calendar, first day of a new series. You'll probably take it with both hands. Keep in mind that banks are still not participating in today's session as well. The Nifty Bank is actually underperforming the large cap pocket, and which speaks about what is indeed contributing in the first place. So let's get the heat map, and you will see the HDFC twins are actually playing a game of musical chairs in today's session. One of the HDFC stocks is actually down in trade. HDFC Bank marginally off, and HDFC is amongst the gainers too. But it is a session that is dominated by large cap IT. While HCL Tech may be the top gainer, but it's TCS as well as Infosys which are contributing in percentage points to the index movement today. So good going there. Select banks like Axis Bank, which had lost out in trade yesterday, is bouncing back. So this one is up about a couple of percentage points as well. Not bad going there. And by and large, a fair bit of green. This may well change during the course of the session, but for now seems like technology, to an extent select financials and autos are keeping the market excited. Remember, it's also the last day of the month, and then and before which we'll and the next trading session we'll have the auto sales numbers starting to trickle in as well. So autos could also be right on the radar of most short-term investors and traders as well. However, if this is the large cap action, the mid cap action is not devoid of activity. In fact, clutch of names like Arcom, double digits. I don't know, Pradeep, if today you're starting off with Arcom, are you?
Yeah, I thought so, but I found a new kid on the block, Astron Paper, to be more exciting. Fabulous listing if you look at it, and it's locked at the upper end. You can look at this chart right now. So Astron Paper is the top performer today, but yeah, after that you have JP Power. So it looks like interest is shifting a bit from ADAG to the JP Group now. Then you also have Finotex Chemical. We've been tracking the stock. Lots of chemical companies have gained over last few months. In fact, the entire 2017, and this is one stock which has been doing well this week in particular. Arcom is of course there on the list, and also JP Associates that continue to do well. Also Indraprastha Medical, after a long time this came on my screen, actually moving up with good volumes in today's trade. We have seen the other hospital names, especially the Fortis, moving up over last few days. Maybe there is some rub-off effect on this one, and DB Realty is the key gainer in the real estate space. But you also have some interesting names on the other side. You have Infibeam, which is down around 15%. Bombay Rayon continues to slip. This entire week, this stock was logged at the lower end, at the lower circuit of 5%, and today it remains the same. You also look at Morippan Lab. The stock went up with good volume over last few sessions, but now it's correcting down in today's trade. And also MCX has lost some ground after that SEBI announcement regarding allowing all these other the stock exchanges to enter commodities as well. Also, it means commodities exchange can also enter the stock business, but looks like MCX is a key loser today.
Right, Pradeep, and in fact, it's been a positive start on day one of the new series. That's the January series. We've seen a good amount of action coming in for a couple of strikes in today's session. Right, 10,600 call and the 10,500 strikes are the most active in today's trade. But overall, on day one of this new series, we've also seen the volatility index going up. So the India VIX is up over 3%. In fact, it has surpassed that crucial mark of 12.5, which most of the derivatives analysts keenly watch out for. So India VIX is currently trading closer to 4% higher. But in terms of Bank Nifty, it is still trading above its crucial support, 25,500. It is holding about that level. If you look at the maximum open interest concentration on the upside, the major resistance for Bank Nifty so far has been the 26,000 level, and it has not been able to surpass that mark. So that will be keenly watched out in the January series, whether Bank Nifty, which underperformed Nifty in December series, can it touch that mark or not. But if you go by the January series, in last 3 years, we've seen good returns coming up for both Nifty, Bank Nifty in 2017. In 2016, we did see some sort of selling coming about. So Nifty was down almost closer to 7%. Bank Nifty saw sharper cuts. And 2015 was once again in the month of January was good year. This is the January series. 9.5% gains for Nifty, and for Bank Nifty almost up 11%. Well, two stocks I want to highlight, and both of them are pretty over-leveraged stocks, and we've seen good moves coming about in the last two sessions. So JP Associates is the one of the top gainers in terms of F&O securities today. On the cash side, we've seen some good volume coming about. Let's see how the delivery data pans out. Yesterday, the total volume was almost the total deliverable the deliverable quantity was almost 20% of the volume which was traded. On the future side, we've seen fresh longs coming about, but Reliance Communication, well, we have to mention that stock because if it's had a good week, so to say, more than double this week. Stock's been going up on high volumes in the cash segment, but remember, the deliverable quantity has been on the lower side, and majority of the action is now seen on the future side. We've seen good long positions for Reliance Communication. Last when I checked, the open interest was up almost 60%. Well, that's about the futures and options market, but Neeraj, it looks like the end to the year is going to be good. Nifty has seen good amount of gains, almost 20 to 29%. It's not only about Indian markets. I think globally, it's been a good year for equities.
Yeah, by and large, almost all of the global markets too have done rather well for themselves. But it's sounding like any other day, not like a year-end day, simply because of the quantum of gains that we have had today. Anyways, we'll talk more about some of the specific pockets. I'm sure all of us have thoughts on, well, some of the losers like MCX, some of the gainers like Astron Paper, and some key names like the ones which have gone up. Amulya Leasing, for example, and Shraddha will be coming in and talking about that. But at the fag end of the year, it's a good time to get in a fundamental voice on the show to try and figure out what's the outlook looking like for the near term. Shailendra Kumar, Director and CEO at Narnolia Securities, joins us on the show. Mr. Kumar, thanks so much for joining in. And from all of us here to you and your team, wishing you a great 2018.
Sure. Same to you, yeah.
Thank you so much. What's the
Sure.
view like? We almost closing in at life highs. I think these would be record closing highs as well if we indeed maintain these levels too. What does January look like?
Yeah. So as a equity market participant, whether you are in India or across the globe in any financial market, if you are particularly in equity, this has been a great year. So you had all kind of positive news. We are ending also at a lifetime high, I suppose. Only problem if your friend has invested in Bitcoin, so you might feel a little depressed, so you got a lot less there. For looking for 2019, we have a very clear view. Surely by the end of the year, calendar year 2018, the market will be trading at a lower PE than where it is trading right now. That's very we are trading right now at about 22.5 times FY18 earning. We believe that by end 2018, we will be trading at less than 21 times FY19 earnings. So that's our first hypothesis. But this is about valuation multiple, not the price. we believe that the earning will be sufficiently growing enough next one financial year to make sure that the Nifty level will be higher than where it is, but not the PE multiple.
Okay, and do you have any targets for Nifty or Sensex, whichever index you track?
Okay, so yeah. So looking at our estimate for FY19, which is about 18% growth over FY18, which makes EPS of Nifty to be 540. Getting an exit multiple next year of about 21, we come out to the target is about 11,300 right now for Nifty from our end.
Okay, 11,300 is your target on Nifty, but Mr. Kumar, what can be the major headwinds going into 2018 for Indian equities, according to you?
See, like if I talk about Nifty, I can say like Nifty will move throughout the calendar year in a manner in which how the corporate lender behaves. So you have to keep an eye on bank like ICICI, Axis and SBI. If they perform good next coming quarters, if the trend in slippages remains lower the way it was in Q2, then we have a very good Nifty year for coming. So that will be one positive as well. If that doesn't work out, if the corporate lender remain in a trouble next calendar year also, then there could be some chance of a kind of a correction in Nifty.
Okay, so that's the call coming in. We'll talk about some more stocks and take your views. But before that, let's look at Amulya Leasing, the stock which has logged at upper circuit today after its promoter completely exited the company. A bunch of marquee investors have also purchased stake in the company, and that could be the reason why it's logged at the upper circuit. Shraddha Babla is here with more details on the deal as well as Amulya. Shraddha.
Well, yes. So in the bulk deal, what we saw was that the promoter, Samir Gupta, sold his entire 35.3% stake in a bulk deal yesterday. It's a single promoter company, so he has completely exited. More interesting is the kind of names that have bought into the stock, which includes Mukul Agarwal's Param Value Investments, which has bought an 8% stake. You also had Vallabh Bansali and Suraj Bansali together buying about 3.8% stake. You even had the likes of Fidelity buying in a minority stake in the company. If you look at the shareholding pattern, the promoter held about 35.2% stake and the rest was with public. Even if you look at how the share price has done over the last 3 years, the share price has grown to more than 5 times, from 119 in December 2014 to 624 today. Even in the last 1 year, it has actually doubled. Now, what does this company do? Well, its website says that it provides financing and leasing services, but mainly it's the holding company of Apollo Pipes, because entire revenues of the company comes from Apollo Pipes itself. So Amulya has been hiking stake in Apollo Pipes since July 2017 and held about 51% stake in Apollo Pipes as of March 2017. Recently, NCLT has also approved the scheme of amalgamation between Amulya and APL Pipes, and now they're also going to get their name changed to Apollo Pipes itself. So we tried to look into what Apollo Pipes did and what that company is all about. It's a PVC pipe manufacturer which works under the brand name of APL Apollo. It caters to infrastructure sectors like transporting oil and gas transmission, and also to building and construction sector. It has plants in UP, and according to our old company presentation, Finolex Industries and Astral Poly are the company's peers, while APL Apollo Tubes, which is a listed company, is a related party. Also, a quick look at the company financials. If you look at the revenues, they've grown from 90 crores in FY15 to 240 crores. If you look at the net profit, that has also risen from 11.5 crores in FY15 to 15.7 crores in FY17. And in terms of debt, you can see that the trend has been that the debt has been coming off, though the first half of this current financial year hasn't been very good. In terms of the valuation picture, Amulya Leasing trades at a PE which is in between that of Finolex Industries and Astral Polytech. Same is the case when it comes to the price to book, where Amulya is currently trading at about 8.5 times its book value. So that's what Amulya Leasing is. A very small company in terms of market cap, but let's see what the entry of some of these big investors can actually do for the stock price.
All right, Shraddha, thanks a lot for bringing in all those details. That's quite interesting that the promoters have completely exited, but some marquee investors, they seem to have checked into this counter. In fact, for 2017, the stocks almost doubled. Mr. Kumar, do you track this stock, Amulya Leasing?
No, we don't track Amulya Leasing as such.
All right, not a problem. But let's move ahead and talk about some of the investment themes that you are betting on going into this new year. What will be your top investment theme?
Okay, so I'll give you cap-wise what are the stocks we are liking right now. So among the large cap, we continue liking Britannia, HDFC Bank, Mahindra & Mahindra and State Bank of India. In the mid-cap space, we are liking right now, we are holding positions in PC Jewelers, Quest Corp, Motherson Sumi, Cholamandalam Investment. We like Engineers India, Reliance Nippon Life Asset Management, Bajaj Finserv as well. So that's a large number of stocks that we are liking right now among large and mid-cap. If we talk specifically on small cap, a couple of names that we have in our portfolio are like FEM Industries, Himmat Singh Ka Seed, and Suvain Tata Sponge.
Okay. So these are some of the stocks that you like. That was a long list really to choose from for our viewers. But Mr. Kumar, what is happening, like you mentioned that probably going forward, P multiples would contract and earnings will pick up. Also, since some of the quality names are now probably fairly valued or rather stretched, people are trying to find opportunities in names which have not performed as yet. So after looking at the returns that people got in ADAG stocks, now there is buying interest in JP Group, Bhushan Steel, Amtech Auto, all such companies which have been stressed so far. Do you like any of these names, or have you recommended your clients to buy any of these stocks?
Not the names, not the names you said right now. So this is giving basically two trend, right? What is happening? First is traditionally, it was more about the kind of quality a company balance sheet has and the cash flow, good quality cash flow. In last year and a half, if you look at the market is favoring growth more than the quality. I'm not saying quality has taken a backseat, but little bit of priority has shifted towards the growth parameter. So if you look at last 1 year and many stocks, and if you look at the valuation multiple, which has been the key to judge the market correctly, it was not price to book or a discounted cash flow. But what has worked in last 1 year in terms of valuation multiple has been EV to sales. So if you look at in multiple sector, if you look at various stocks, how they are stacked, you will find the EV to sales is giving the best kind of a pick for you in terms of the stocks. So there's one trend. Secondly, the way sales is becoming important in the market, it simply suggests you that in the next 1 to 2, 3 years, there's going to be a lot of M&A activity happening in India. A lot of corporate restructuring will happen. One right now because of debt restructuring, the NPA resolution, so a lot of corporate events will happen. A lot of restructuring will happen, and maybe towards the fag end of the 2018 and 19, you will find a lot of M&A happening in Indian market. So investment banking and just space. So apart from in capital market, apart from asset managers that we like a lot of company who are into betting more largely into investment banking. So these are the trends for the year and maybe the next year after also.
Okay. I'm going to pull up MCX and want your view out here, Mr. Kumar. It's one point to argue that a commodity broker or commodity exchange will be able to enter into equities, but the bigger challenge would be that a well-established equity exchange or two well-established equity exchange, both NSE and BSE, will now also be able to offer commodity services. Since you are a user arguably of both or all the three, if I may, and please correct me if I'm wrong, who do you think wins the battle in the long run? For now, the market seems to be suggesting it's a bit worried about what a national stock exchange could do in the commodity space to an MCX. The stock is down about 3%.
Correct. So one thing is very clear. The investor and the intermediary will be winner for sure. So as an investor or as an intermediary, the amount of hassle get reduced for KYC and other processes. So as an investor, as an intermediary, surely is a very positive step now. So you have four exchanges as such: BSE, NSE, MCX, and NCDX, which are like has a good amount of market share right now. After the October 2018, when all the exchanges can offer all kind of a financial instrument, naturally four will not be, the market will not divide equally into four. So there will be one or two guy who will have 50% plus market share. One, of course, will be NSE because of the kind of lead they already have over other three exchanges. Out of BSE and MSE, one will be getting, extra benefit. I'm not sure right now it's not very easy to perceive whether it will be BSE gaining more out of the gain or the MCX might get a lot of equity into this thing. But there will be two large players, say in 2 to 3 years after October when the regulation gets into effect. And the investors and traders and intermediaries are surely a winner.
I had a small conversation with a few people who are in this business as well, and commodity traders, and all of them, at least when quizzed about this potential thing, had to say that they will not really want to vacate out of MCX, the commodity platform, even if NSE comes in. But you don't know post 2018 when it's an integrated platform as to how would people's behavior change. The only thing that I would probably add out here, and maybe Mr. Kumar is a better bet to judge, is that MCX was at 1250 or thereabouts when this whole set of news about derivatives and options and other news flows come about in the last 12 months. And despite all of those good news coming in, the stock is actually down from a price tick of over 1250, went all the way to 1400, currently at 911. And that tells you something. That tells you that the market is not completely confident that volume growth will come back in a hurry for MCX, even within its domain. Forget it making a beeline and an entry and inroads into the equity piece. So I don't know which way.
But for the longest time, I think BSE's tried to garner more market share in the futures and options market, where NSE is a leader. They have almost 90% market share there. They've come out with multiple schemes. You know, they tell the brokers, you do so much of turnover, we'll give you so and so benefit, but still they've not been able to tap the market. So the next step will be what kind of schemes these exchanges, BSE as well as NSE, they offer in the commodities market.
It also means that people are not willing to change the habit or change the platform. So those who are on MCX or on NSE, would they really want to shift? And even, you know, if you look at the commodity market, it's divided between MCX and NCDX. NCDX into agri, MCX more into hard commodities. Even that hasn't really changed. So it looks like, you know, once you are used to an exchange, it's, I don't know what kind of incentives could NSE or BSE offer to these people to come over and join them.
Or vice versa. Mr. Kumar, let's end this conversation by that final thought. For MCX as a stock, long being hailed as that one big winner, but you know, it's always been the bridesmaid, never quite the bride. It hasn't really created that big wealth for investors. What happens now?
Yeah. So, see, as a rule, will not ask you to, you know, catch a falling knife. That's a for sure. But what I'm saying, out of the 4 players, NSE, BSE, MCX, take 3 larger players, BSE, NSE, and MCX. If we assume one player will have, say, 2/3 of the market, that means one player will become much larger. So, if an investor, or as a strategy, if you hold all the 3, so NSE is not listed right now, but say if it lists, if you have 3. The one winner will give you kind of a return which will compensate whatever loss you will have on the one loser. So if we have 2 dominant players in future, say 2019 or 20, one winner will make you much more money than the third loser which will have a small losses. So I would not say go negative on any of these. Hold MCX, hold BSE. If NSE comes, buy that too. Because one will be, if one is going to be a predominant player, it will create so much of a wealth that whatever small money you will lose on the third will be, you know, very small in that comparison. So their strategy is very simple.
Okay, we'll leave it at that. Mr. Kumar, thank you so much for taking the time out and joining us. And as we said at the start of the interaction, have a great 2018. Well, that's the view from Narnolia Securities with their thoughts on 2018, some stock ideas as well. I tell you, a stock which is doing very well is Aarti Industries. It's in focus after it signed a 20-year deal for 10,000 crore rupees with a US-based company for specialty chemical supply. To discuss the contours of the deal, joining us on the phone line is Vice Chairman and Managing Director Rashesh Gogri. Good having you, Mr. Gogri. Thanks so much for taking the time out. Can you tell us, the number seems astronomical. Would it be split into even installments of what, 500 crores each over a year? Is that how the deal would be structured, or would it be milestone based?
No, this will be 500 crore per year, every year supplies, starting from 2020 for 20 years, exclusive deal, with a customer for supply of specialty chemical intermediate. Okay. And we are going to invest $35 to $40 million in next 2 years, and the plant will be starting the supplies in year 2020.
Okay. So you're going to be building a plant specifically for this? I mean, is that where the investment is coming in?
Yes, yeah.
Okay,
and
and
this special for on-purpose plant which is going to be built for this specific specialty chemical intermediate.
And this plant would essentially cater only to this particular customer, so to make about 500 crores worth of revenue every year.
Yes, with a single product and a single customer.
Wow. Okay, is that the nature of deals to happen, Mr. Gogri? I mean, we haven't heard of such deals happen in the past, I presume, in the specialty chemical space. Is this one of a kind of sorts?
Yeah, we did sign another similar deal where we did a 4,000 crore supply agreement for 10 years of a agrochemical intermediate in start of this 2017. So we are focusing on such opportunities where we are exclusive suppliers of these kind of chemical intermediates to global majors.
Okay, and after this deal, what kind of revenue growth are you looking at for the current year and the next year in particular?
So basically, our normal capex growth is going to be 10 to 15%, but this deal, growth will start coming in from 2020 onwards. So several projects that we are running are going to mature in 2020. So 2020 onwards, we will have higher growth in overall top line and bottom line.
So you're suggesting 500 crore of turnover contribution that you're expecting from this particular plant.
Yes.
What sort of margins can one look at and profitability from here?
Yeah, basically it is a capex neutral deal. So we are not going to invest money for this. We are going to get an advance payment from the customer against the supply agreement that we have signed, and with which we are going to put up this manufacturing plant. So
the entire capex for this plant, Mr. Gogri, is what you're suggesting is being funded by the client?
Yes, yeah.
Okay, go ahead. I just wanted to know what sort of margins can one expect from
here,
FY20 onwards?
Because we are not involving any of money. The EBITDA expected out of this is 16 to 18% over a 10-year of project.
Okay, and any more deals of similar nature that you're working on?
There are several opportunities which come to us time to time, and at appropriate time we would disclose any other opportunity if it matures. Normally it takes close to a year for such kind of deal to mature.
But what sort of risk do these kind of deals, give? Because is there any clause where the client can actually pull back since the plant is being set up only for a single client?
Yeah, so we have a lot of measures to protect ourselves from any such eventualities. So our company is going to be fully protected in any eventuality that something happens to the customers or anything. Our investment is going to be protected.
Just one question. The 16 to 18% margin that you mentioned, this
EBITDA.
is EBITDA margin. This is as compared to what is it that you normally enjoy on your other orders?
20 to 22%.
Also, the margins are actually a bit lower.
Because there is no capex involved. So I'm not spending any money.
But then, shouldn't the margins be higher then, sir?
Because before interest, because there is no interest, so we can't
Sure.
get higher margins, because always there is an interest component of 2, 3, 4%.
Okay.
Which gets involved. So the margins in a project where there is no capex will be always lower.
Okay, fair call. Just one final question. While this is slightly long-term in nature, how is the short-term looking like? FY18, what's the quantum of growth rate that you presume the company can clock in?
Yeah, FY18 is going to be stable in terms of bottom line, and in terms of top line, I think we are showing 10% growth over last year. And 2019 will be better.
Better than 10%?
Yeah.
Okay, fair call. Good having you, Mr. Gogri. Congratulations on a unique order of sorts. Thanks so much for taking the time out. Have a great 2018. That's Rashesh Gogri of Aarti Industries. Interesting deal, 500 crores a year. No capex to be incurred for the plant that they will make especially for this client. 7% higher is Aarti Industries. Okay. More though, it's not really about what individual stocks have done, though it is always about individual stocks, but the index by and large has had a stellar run this year too, returns of up 30%. Let's decode the year gone by for the index throughout the year and some very interesting charts that Pradeep has put together for us. Pradeep.
So let's have a look at how Nifty has done this year compared to last 19 years or so. So what you have right now on the screen is last 20 years chart starting 1999, and all these green bars are actually representing good years and the red ones are bad years. So first of all, if you look at after 2001, so far we have had only 3 red bars, which means since 2001 over last 16 years we only had 3 bad years and balance 13 years were actually positive. How does 2017 really figure among these good years? If you look at the overall movement in the index from around 8,000 to 10,500, 2,500 points run on Nifty actually looks probably the best performance that we have seen over last several years. But let's put this into the right perspective. That is, if you convert this chart into a log chart and then you get the percentage return, and then the bar looks much smaller. So actually, although we thought 2017 was a great year for equity markets, but just look at the performance of 2009. And in fact, even just 2 years back, if you look at 2014, was probably as good, but the levels were much lower. All these stocks that we are, when you look at the record levels, the all-time high levels today, then 4 years back, the price levels were much lower, but the percentage performance was much better. So 2009 was probably the best year over last 20 years, and this year is okay, one of the good years, but not that great. Also interestingly, if you look at what happened to Nifty vis-a-vis Nifty Bank and the mid-cap index, and here now you can see these 3 curves on the screen. The green one is actually Nifty, the white is Nifty Bank, and pink one is mid-cap index. You can see in the beginning of the year, we start with a 0 base and see what kind of returns have these indices given you. Till about May, it was mid-cap index that was leading, and after that, Nifty Bank started to lead till about November end or early December. But in last 3 weeks, Bank Nifty has again gone sideways, and it is the mid-cap index that turns out to be the best performers. Look at the numbers: 28% return on Nifty, 40% returns on Nifty Bank, and 47% on Nifty mid-cap index, that is the Nifty Free Flow 100 index that we track. So this is just the data, but let's look at the technical pattern and how do we really look at the Nifty or this movement and what lies ahead. Well, this is a chart that we had shown you in October, and we are revisiting this chart for a simple reason. What it shows is these red and green lines are actually the Fibonacci numbers. So we have taken just 200, 200, and also we have looked at the 0.61. So this is 0.61 and this is 1.61. These 2 data points are significant because if you look at the entire movement since 2008, and because this is year end, so we are looking at the long term data, you'll realize that when index started to move up, each of these Fibonacci numbers turned out to be key resistance levels. So now at around 10,500 or 10,460, that's the precise number, in October we had looked at this chart, and since then for last 3 months we have been consolidating around these levels. Interestingly, now market has moved above that point. Probably we'll close the year at 10,500 or 10,500 plus levels, which means we have probably given a breakout. But when you look at the multi-year charts, you'll have to wait for a few weeks. So now the technical call or the technical view of looking at the Nifty chart, at least here on, is if we sustain above 10,500 for a few weeks, maybe market is set for the next leg of rally. Where will it take us? Probably we'll try and assess the targets as we go forward. But for now, this remains a very important point. It's very significant for market to sustain above 10,500 at least for a few weeks, and maybe give 1 or 2 expiries above that level. Then we could be confident that okay, now we are set for the next leg.
Okay, so that's about the Nifty, how it has performed this year and what it also means, what Pradeep just explained on the charts in 2018. But currently, the markets are pretty much holding above that mark of 10,500. 10,525 is where Nifty is. Bank Nifty seems to be underperforming. And what's contributing to the gains are your heavyweight IT stocks, TCS as well as Infosys, HCL, all of them today have been trading in the green, and Nifty IT is actually one of your top sectoral gainer. As you can see, that's the contribution chart. The top two contributors are your IT stocks, TCS as well as Infosys. But from the broader markets, I guess the paper stocks are doing pretty well. Pull up Balkrishna paper. That seemed good returns, so to say, at least in today's session. Paper stocks have been, this is Balkrishna Industries. Let's just pull up the stock of Balkrishna paper. That's up 13%. West Coast paper, Orient paper, and even Padamji pulp have seen strong gains in today's trade. Let's see if these gains can continue or not. But the Nifty metals and the media, these are the only two sectoral indices today which have seen a bit of weakness coming about. Besides that, IT, FMCG as well as the auto pack continues to do pretty well.
Okay, let's get in our experts on board. Anand Tandon, market expert, joins us right now on the show. Anand, good having you. Thanks so much for joining in. If you're an equity investor into any markets, Anand, I don't think you can complain. I just got a forward and I haven't verified it, but apparently while we are celebrating the 30% gain in India, lo behold, Venezuela, Mongolia, Ukraine, Kazakhstan, all of them have had a fabulous run. Seems like the party's been across the globe.
It certainly has. I think we've had a synchronized bull market across all asset classes, not just equities, for most part of the year. And I think India has just participated along with the rest of the world. In fact, one could argue that in recent times, the foreigners have stayed away from India because they find that some of the other markets are a little more attractive. So, I don't think there's any exceptional thing that India has done as such. Of course, for most investors in India, it doesn't matter what happens to the rest of the world because you're by and large European investors. And so long as you're making good returns here, who's going to complain?
So, in fact, what we saw, the FIIs didn't really like this market, Indian market, this year, and they were selling for most of the months. If you look at, maybe that was the reason that Neeraj has just mentioned, because other markets were doing much better. But what happens in 2018? Would you expect FIIs to come back, or we'll have to look at the mutual fund flows and domestic liquidity will remain in the driving seat?
Well, there are several things that's happening in the rest of the world, right? Clearly, the biggest joker in the pack is, one, the tax reforms in the US, which will attract money back into the US markets, and two, the movement of the US Fed in terms of tightening interest rates. That is, of course, countered by the fact that we continue to have fairly liberal QE equivalent happening out of Europe and Japan. So to that extent, the effect of the US tightening may be somewhat muted, at least in the initial parts, unless some of the other central banks join into the queue, in which case there will be an issue. So other than the tax factor, which is the most predominant money driver back into the US, for the rest of the markets, I would imagine that emerging markets will likely continue to do reasonably well. India itself, of course, when you look at it bottom up, it looks extremely expensive, and the valuations are very stretched. Along with that, the fact is that the PE expansion is unlikely to continue from here on, given that the interest rate cycle has probably turned upwards. So you're now waiting for the earnings to happen. The good news is that there is a likelihood that the earnings this year may actually be good. Of course, I still expect consensus earnings to continue to fall, like they have for the last maybe 4 years now. But that said, you'll still get at least mid-teen kind of earnings growth, which will at least allow the market to hang around in this range, if not do better. So I would imagine that this is likely to be a less exciting year than the year that's gone past. And you will find that the leading indices at least are somewhat more range bound, and the returns even from the broader market may be a little more muted, but should be still attractive enough.
Well, it's been a rally which has been fueled by liquidity globally. Pradeep, MSCI World Index, which tracks the equities across the globe, is up 20%, and these sort of returns we've not seen in the recent past. The emerging markets MSCI index is up almost 35%, and we are up 30%. I think the bigger question is what Anand was mentioning: if we see those rate hikes coming from US Fed, whether the fund flow, especially the FIs, they shift their focus back to developed markets like US, because it's always better to take a bet on a market which gives you consistent returns than to take risk in markets like emerging markets. And also for these FIs, it's quite expensive to trade into these markets. So that will be a key factor to be watched out. But let's quickly get our technical guest also on both. Sarvendra Srivastava, independent market expert, is joining us, and also Shrikant, Chouhan, Senior Vice President of Technical Research at Kotak Securities, are here with us. Well, good afternoon to both of you, and thanks a lot for joining us today on Bloomberg Quint. Sarvendra, let me come to you first. Last trading day of the year, what kind of trade or position would you take on Nifty or Bank Nifty?
Yeah, very good afternoon. I would be a slight contrarian here, and the markets that Neeraj was mentioning, I think clearly there's definitely a lot of excitement and euphoria, and I would take the contrarian side of the approach, and we've been maintaining this stance right from the second week of November, and we continue to believe that Nifty will eventually fall towards 9,700, if not more. And till the events were there, the Gujarat elections and the US events were there, we were maintaining more trades on the option side. But I believe that now you can probably short the spot or the futures as well, and I have spot levels here. So I would say that the first target for Nifty on the downside is 10,000. Second target would be 9,700, and I would short current market prices, and I would keep a stop loss at 10,716.60 on a closing basis on Nifty spot, and short the markets. And my sense is that you should be taking money out of the table and being light. And if you are aggressive trader, then you can also look at shorting the market as well.
Sarvendra, I don't really doubt your call, and maybe your reading is right. But if you look at some of these segments, like you look at metals, you look at tires, there are several stocks, even in pharma, that have been consolidating for a few weeks or months now, and looks like, you know, the new leg up has just started. So maybe we have seen a consolidation, but after that consolidation, at least the stock-specific breakout is on the higher side, and not many stocks are really, you know, looking at a breakdown here on.
See, I think the names you mentioned are more defensive plays. So I would also today, in fact, I have a trade on the IT space, and I am long Wipro. I'm going to probably initiate that trade. I've got that in my graphics. But what I meant to say here was that yes, defensives can outperform. So names like ITC, some pharma names, and ID stocks. Hindustan Lever, I think all those defensive names probably could outperform the Nifty going forward. They could give some support. So if they don't perform, then the Nifty could actually be at 9,200. So if defensive plays don't perform here, Nifty could actually be at 9,200. So I would say that eventually, irrespective of defensive names going up, I would decisively like to short these markets. And without mincing words, I would say that we are entering an even year cycle. And mind you, all even year cycles barring about 1988 have given major corrections. And by major, I mean 20-25% average. So all even years from 1982 till now have on an average given you 25% or more of index correction in India. So the next year we are entering from the next trading session is 2018, and that is an even year. And especially Jan is a very typical cycle for tops. So you have to be very, very cautious in Jan.
Okay. Shrikant, what's your trading strategy for the coming series?
For the coming series, certainly one has to be cautious at 10,600 levels, because there we are expecting some overbought kind of status for the market. Even at current levels also the market is overbought. But because today in the new expiry market opened higher above its previous low, and it is maintaining well above the psychological mark of 10,500, I am of the view that market may rally up to 10,600 or 620 something. But around 10,600 one has to be cautious, because whatever the news flow is there right now, that is not positive, and number of stocks are like diverging negatively. So for the coming series, I am expecting very first to market correct up to 10,400, or in worst case scenario 10,300. But by the end of expiry, again I am expecting uptick in the market because of the ahead of the announcement of budget and all. We are again expecting uptick in the market, and 10,800 or 850 should be the final target on the higher side for this expiry. So initially we are expecting some correction, and later on we are again expecting a rebound in the market up to 10,850.
Navneet, also, you also mentioned the same levels, right? 10,300 and 10,700.
That's the trading range which the options data is currently suggesting. But if you look at the maximum open interest concentration for the January series, it's actually quite wide. It's between 10,000 to about 11,000.
1,000 points.
But let's also get some trading strategies going. Shrikant, quickly, your top trading strategies for the day?
See, all these power stocks are doing well, and Tata Power, especially if we see the stock, then it is trading at 94.50. In fact, Tata Power, R Power, Torrent Power, JSW Energy, all are doing well. And I'm of the view that in 2018 we are going to see maximum activity out of this power sector, because it is it was completely underperforming in the previous year. I'm saying in 2017. So this year for 2018 we are expecting power to perform heavily, and current at this price, if really like somebody wants to create any position, then Tata Power looks good to buy at 94 levels with a stop loss at 92, and we can keep a target of close to 98, 99 on the high side. We also like Torrent Power, which is trading around 279 to 80 levels. There also a lot of bullish momentum, and there also we are expecting minimum 290 to achieve in next 1 or 2 days of time. Here we can keep a stop loss of 274 on the downside.
Look at Reliance Power. The stock has moved up in last few minutes of trade. In fact, Tata Power moved up by 2%, but Reliance Power has moved up by around 10% or so. Just look at this movement. It was almost flat till around 5-7 minutes back and is up by around 12% now. So power is a sector that Shrikant likes at this point of time, and all these stocks in this sector are moving up currently. So definitely several traders are taking positions here. Sarvendra, what would be your bets? You said IT is what you like.
Yeah, our defensive play would definitely help. So if you are giving an exposure 20-30% of a defensive play also in a market which is probably wanting to go down, that's our sense. So we might be right, we might be wrong, but I would say that I allocate 30% to a long trade on the defensive space, and I would say I would want to, on a trading play, I would like to trade Wipro on the long side. What I will do is that I'll look to buy a spot for a target around 325, 330 on Wipro, keeping a stop loss below 298.80. That would be the only long trade from the defensive space that I would like to suggest. And the remaining 2 trades are on the sell side. High beta names, both of them. First one being from the metal space, Hindalco, where I think slight negative divergence is now appearing and indicators being very, very overstretched. I think small correction back towards 250, 256 possible on Hindalco. So short sell Hindalco, these are all spot levels. Stop loss there is at 278.10. And the last one is BPCL. This is an interesting chart, and this could actually end up being a larger decline for BPCL as well, because now the WTI crude, what we believe, is headed for our targets of around 65, 66. And in the final blow off for crude, I think OMCs could probably suffer. And looking at BPCL standalone, a 12-month kind of a negative divergence on weekly charts, on weekly indicators, and now rolling over. So this week is rolling down for BPCL. It could be a larger cut. I am not saying that, but for the time being, I am saying that it can go test 495, 500 on the downside. So 500 as a target, and 530.10 as a stop loss for BPCL, levels again in spot.
Okay, stay on, gentlemen. So much more to talk about. Must mark though that IT is really packing a punch. Wipro is now up 2%, HCL Tech is 2%, and TCS has overtaken that Wipro or HCL Tech as the top performer on the index by a margin now, trading at the high point of the day. So CNX IT it is, which is really looking solid for ending the day with some strong gains in the session today. But if today may have belonged to IT, it's also about what the year has been, and it's probably been a year for consumer durables which have regained the momentum in 2017. The BSE Consumer Durable Index per se has outperformed almost every other sectoral index this year, barring the BSE Realty Index. Nikki Mirchandani is standing by the lowdown on what the index did this year and what the different components have done this year. Nikki.
Hi Neeraj, correctly put, it's regaining the lost momentum that it has seen. 2017 indeed has been a good year for all the sectoral indices on BSE, but particularly so for consumer durables, which has clocked the best yearly returns that we've seen since 2005. It has fetched a return of around 100%. It has outnumbered most of the sectoral indices, as just Neeraj pointed out, but barring a real estate realty index, which has fetched a return of a little over 100%, that's 105%. What's really working for the index will be your implementation of GST, which has worked extremely positive for the sector. Lower penetration and a rising income in the middle class as well as rural household is also working well for the sector, according to ICICI Direct. But if you look at the chart, which says it's about a chart that we're looking at, if you look at the performance in 2016, which is a negative return that we're looking in for this counter at 6%, we've seen 100% gains for this counter in 2017. You can compare that with the 2005 figure of around 115. That's when the index rose to that level. Also, if you look at the top, the journey of the top gainers here, the first we have is, well, you will look, all the tel stocks have gained in this index, but then more so TTK Prestige, which is also one counter, which is done comparatively less as compared to most of the peers in the index. It has given a return of 35%. But if you look at the top gainers, you have list of VIP Industries, Titan and PCJ. And also, this brings us to the question if this rally is sustainable. Well, we look at the performance of these stocks and compare that with the return potential that we have at Bloomberg. You would see, while most of these VIP Industries tied to PCJ Jewelers, they've given a return of more than 100%. But if you look at the return potential, that's not a good number. It's a minus figure, a downside potential that we're looking at this counter. Even the least performing the stock, that is TTK Prestige, which has given a return of 35% for the year, has a negative potential of around 23% so far in this year.
Thanks for that, Nikki. Well, that's an interesting piece of analysis. But as we speak, just want to highlight Bank Nifty's breached its support level of 25,500. It's back above that, but it did move into the red. So that's Bank Nifty, 25,496 currently. Anand, let me come to you and take your view on the consumer durable space, what Nikki currently highlighted. We've seen good gains from the likes of VIP, Titan, PC, you name it, and most of these constituents in that index have outperformed. Do you expect the rally to continue into 2018?
Well, I mean, the demand may continue to grow because of the fact that the expectation is that rural India will do better. So some of the consumer durables, etc., will also do well along with that. The question is, as stocks, do they leave you much upside? And my argument is that, you know, it's probably the most overowned sector and pricing in most of the upside that you can get. So unlike, so in my view, it's not likely to be a sector that is going to lead any kind of rally from here on.
Different pockets though, Anand, I'm surprised. I mean, just wondering, not surprised really, but almost everybody believes that this whole move from unorganized to organized is just about starting from the consumer durables company's perspective. I mean, annual report after annual report, most managements have been confident on that front. You don't believe there is merit in that argument?
Consumer durables, I don't see the presence of too much unorganized in the first place. The move that is likely to happen is in those sectors where there is a large amount of unorganized players. But there again, first of all, nothing has happened because so far the e-way bill has not been implemented. Assuming that implementation happens quickly because it has been preponed now, and that actually makes some amount of impact, yes, you will see some change. But it is rather strange to assume that, you know, everybody who's been doing business will just roll over and die because of some tax reform that has a change that has happened. People will adapt. So yes, you know, there may be a market share shift, but I think the shift is going to be far lower than most companies assume that they are.
Okay, fair call. What else? There is a clutch of other names which seem to be doing well. Remember, the JP Group stocks have had a field day in trade. But yeah, guys, just look at the top 10 gainers on the NSE 500 or the Nifty 500. JP Power, Reliance Communication, there is the other JP Group stocks as well which have gained. So JP Power is one, Reliance Communication is the other one. There is strength in JP Associates, which is up about 12%. HDIL, Unitech, Reliance Power, DB Realty, GMR Infra, IFCI, BF Utilities. I don't know if you have a fundamental view on any of these 10.
I was just coming to that. The top F&O securities, among them only what you just mentioned. So look at the quality of stocks which are going up, and these are the companies which are actually over-leveraged, which Pradeep has been highlighting during the day. So maybe after Reliance Communication, the big brother bailing out Anil Ambani, I don't know if something is happening or it's can't say it's a rub-off effect on these companies, but definitely these over-leveraged companies are gaining in today's session on some hope.
To talk about fundamentals, actually I read a quote yesterday itself, I think, which says that, you know, the 100% of information that you have on any stock is history, and 100% of price movement depends upon the future. That is completely unknown to anyone. So we don't know what market is really anticipating in all these stocks.
Yeah, no, that's true. But Okay, anyways, I'll refrain from making any further comments. Maybe we'll let Anand do the comments and maybe get a technical view on some of these as well. Anand, any of the slightly distressed, if I can use that term, names, which are now starting to find a suitor or two, any of these pockets look of merit? I mean, appear to be good enough to consider an investment, not necessarily make an investment?
Well, I think that if you look at the groups and the way they are structured, I think, for example, the Anil Ambani group looks like it's coming out of a very bad phase. Clearly over-leveraged, perhaps a lot of cross-holdings which were not in terms of debt. Now that at least one of the major companies has been sorted out, and Reliance Infrastructure, for example, has also managed to sell off some of its assets and is deleveraging fairly significantly. I would argue that the risk to that group is now far, far lower. And I wouldn't be very surprised if the next year you see that as the major group that is getting re-rated. Don't forget that it has moved down almost to 1/10 of its original value. Nobody's arguing that the valuation will come all the way back. But even now, if you're looking at assuming that the balance sheet is relatively clean, Reliance Infrastructure or Reliance Capital is probably, at least Reliance Infrastructure is still trading at half book value. So is Reliance Power. Reliance Power is actually a profit-making company, and if the shift to Bangladesh happens successfully, there is no reason to assume that that can't re-rate. You had an analyst just now saying that power is a sector for the future. So that could be, one of the big movers there. So I think that is one group that will certainly do well. I think the other group that I think has already done quite well, is likely to do better even going forward, is the Tata Group. Two extreme ends of the spectrum, but the Tata Group, in my view, has done only the first phase of elimination of cross holdings, and there is a lot more to follow. So that would be another group that I think could do well. So rather than looking at it only sector wise, I think it may be sensible to see what's happening at a group level, and I think these two groups stand out to my view.
Anand, I don't know whether you were tracking this IPO of Astron Paper that got 250% subscription, and today it listed at 140% premium as well. But if you were tracking this stock, what's your view on this issue per se and the sector in general?
So, I don't track IPOs for a long time till they get listed and get traded. That's not a market I understand very well. But paper in general is going through a good phase and is likely to do so for the next year or so. Especially those which are using waste paper are in an even sweeter spot. A lot of things have happened which have increased the demand, and the supply has not increased in the same proportion. A couple of large companies have stayed out of the industry because of their own debt issues and so on. So consequently, if you are really looking at paper, I think there are a whole lot of them out there which are doing very well. Of course, companies like West Coast, etc., the stock prices have gone up quite a lot. But a TN Newsprint, JK Paper and so on, I think still give you some reasonable upside possibilities, given that the valuations are not looking particularly stretched.
Okay, let's just pull up Idea. That stock's also seen strong gains in today's session. In fact, up almost closer to 5%. It's come off mildly days high, but let's just get a technical view. Shrikant, on the charts at 107, do you see any trade on Idea?
I think in today's date, the stock is like up by almost 5%. It is very difficult to take any trade on intraday basis. But if there is a positional view, then certainly like one can take position, because we are of the view that the stock is heading for at least 130, 135 in next 1 or 2 days, 2 weeks of time. So if there is any correction, then one should certainly look for adding the stock to the portfolio, because the stock is having very high momentum, and in last 7-8 days the stock was like struggling between the range of 98 and 104. Today comfortably the stock has broken this level, and while looking at the overall telecom space like Bharti, Reliance as well as Arcom and Idea, I think a lot of money is like flowing into this sector, and this particular stock is like doing extremely well. In fact, it is relatively outperforming in this particular space in last 2 months of time. So we are specifically bullish, and if there is a positional view, then certainly one can take a buy call on Idea at current levels.
Okay, so you can look at Idea at current levels is what the advice is. But just looking at some more stocks in today's session, let's just pull up the intraday chart of Tata Motors. I think that's also gone up. 429 is, in fact, it's the top gainer on Nifty right now. Tata Motors is almost trading at days high. Sarvendra, any view here on the charts? 430?
No, absolutely. This is one stock that we like, and as a disclaimer, this is stock that we are interested in. We hold for clients and in personal portfolio as well. I think long-term setups are very, very encouraging here. Probably with the market going down, it can correct 5-10%. That's definitely possible. But its monthly and quarterly setups are very, very encouraging now. And my sense is that probably the panic, probably whatever short-term panic that ended at around 350, 360 that we had printed last to last quarter. Yeah. So my sense is that yes, if someone has a long-term horizon and can withhold a pain of 5-10% on the downside, why not? Tata Motors definitely is looking good. Quarterly, monthly setups are looking good. For an immediate short-term trade for a week, 10 days, I think the stock could do 450, 455 on the upside. But if you're doing that trade, then you'll have to keep a stop loss below 410. So mind that, and both on the short-term basis as well as long-term, definitely a buy.
Okay, that's the view on Tata Motors. Remember, the stock has underperformed its peers in 2017, and according to most of the analysts, now valuations look pretty attractive at current levels. But let's also talk about the FAB4 stocks of the day, and to take us through the same as usual, Yash Upadhyay joins us. Yash, over to you.
Good afternoon, Navneet. So it's the last trading day of 2017 and a lot of green on the screen. So we start off with Dredging Corp, and the stock which had seen a spectacular 17% up move yesterday, tops our FAB4 list, and the stock is up about where's Dredging Corp? Okay, the stock is up about 8% today. They mixed up the order. Never mind. So the stock is up about 8% today after Vijay Kedia of Kedia Securities bought close to 1.75 lakh shares, or about 0.6% stake in the company via bulk deal yesterday. Aston Papers, the new kid on the block, saw its listing today, and what a spectacular listing it has been. The 70 crore SME IPO, which saw its subscription numbers coming in at 243 times, has given a listing day gain of almost 140%. So good move there. GTPL Hathway is another name that we have on our radar, and the stock is up about 5.5% after the company increased its stake in two of its subsidiaries. And as per the scheme, they would be increasing their stake in GTPL Surat by 49%, making it a wholly owned subsidiary, and about 23.5% in GTPL Ahmedabad. And lastly, the last stock of our FAB4 list in 2017 is Technofab Electric, and the stock had rose as much as 5% today after the company said that it has won an EPC order worth close to 206 crore rupees in Afghanistan, for which the project is funded by Asian Development Bank.
Okay, well, thanks a lot for that, Yash. So those are some interesting names out there. Well, before we thank you, Anand, a unique name, Dredging Corporation, and I call it unique because I find it interesting and amusing at times that on talk of a possible potential divestment, stocks tend to flare up the way they are. Remember, I think there is the Maritime Union which has already opposed the proposed divestment of Dredging Corporation, but the stock is up 16% yesterday, 8% today. Yes, dredging business is alive and kicking, but you reckon it's a company worth investing in?
I think the dredging business is worth looking at. I'm not so sure about the Dredging Corporation. I think you'll find that there will be opportunities for some other ways to play the dredging theme, if not directly through some of the companies. Most of the PSU companies I don't see as having much value, except those which work in areas where they've been given assets and are just milking them. Rest of them, wherever, so with dredging, for example, not getting any nomination orders, I don't see what the excitement is.
If you can, Anand, would you tell us what do you mean when you say there will be other ways to play the dredging business? Would it be buy some of the companies which are ancillaries to that whole business? How would you play it?
Well, it's first of all, it's not yet a large business. We are expecting that water cleaning up, etc., will be a big business, given the fact that there is a Sagarmala idea that the government is toying around with, and maybe some of it will come in next year. If you are looking at it, like there are at least 4 dredging companies which are privately owned in India already. It's not necessary that Dredging Corporation will be the one that will benefit. You could, for example, look at some of the private companies. But if you don't get that, as I said, there are other water players which may be more interesting more interesting companies, where at least there is no conflict of interest between what the owner wants to do and what you as a shareholder want.
Thanks, Anand, for taking time out for us today. And now Gaurang Shah, Head Investment Strategist at Geojit Financial Services, joining us on the show. Gaurang, what is your advice on the first day of the new series and last day of the current calendar?
Hi, Pradeep. Good afternoon to you, to Neeraj, to all the viewers. And let me first of all wish a very happy, prosperous and a healthy 2018 to
You forgot Navneet, Gaurang. Gaurang, you forgot Navneet.
I'm sorry. I'm sorry. That's what I was getting to. The entire team, including Navneet, and of course her better half. Please do wish him on my behalf, Navneet. And all the viewers a very happy, prosperous and healthy New Year 2018. So I think the best thing, Pradeep, you can do on the last day of the trading and virtually the second last day or the third last day of the year 2017 is to just sit back, relax, enjoy the 25% plus ride that we have seen on the Sensex and Nifty, and it has been a stellar return. But having said that, I think there's going to be plenty of opportunities in the years to come, including 2018. And our guess is that you should stick to the themes which have given visible earnings growth in the last 2 quarters or the fiscals gone by. And at the same breath, I would also want to say that there are going to be sectors which are going to be driving the markets to the higher level on fallback of various things that the government has done, whether it is with respect to GST, whether it is to do with the policy changes, or whether it is to do with the implementation at the ground level. So consumption, commodity-related metals and cement, auto ancillary banking, private as well as public, selective names in infra, cap goods engineering and defense play. That's the broad theme, Pradeep, that we are listing down, and I would advise all your viewers and investors to stick to the frontline names first. Only and only if you have understood the mid cap or the small cap or the micro names, only then go and venture out over there. Otherwise, my sense is that 15-20% return for the year 2018 on the index is possible. And in case if you select the right stocks, right sectors, then maybe you are going to get a bonus of another 10%.
Thank you for your wishes, Gaurang, and wishing you a very happy 2018 and a profitable one too. Gaurang, the quality of stocks we've been discussing here, which have gained today, stocks like Reliance Communication, JP Associates, Reliance Power, HTIL, and a whole host of other counters, GMR Infra. What is your view on this, kind of gains that one is seeing? Is there any trading opportunity here? Do you see any value in any of these stocks which are going up, or is just a relief rally sort of?
So let me say this, Navneet, that, and I'm sorry, I don't have a screen in front of me, so I couldn't see you. So apologies for that. I didn't take your name earlier. It's Neeraj had to correct me. So thanks for that, Neeraj, first of all. And all these names, Navneet, that you mentioned, they have rallied to a great extent. And I, with all due respect to 2 names in the ADAG group, that is Reliance Power and Reliance Communication, and history is witnessed over the last almost 9-10 years, or Reliance Power has been a great wealth destroyer. So is the case with Reliance Communication. It's only respite over the last, I think, a week or 10 days that the stock has rallied almost 100% or more. I think it's a perfect opportunity to exit Reliance Power, Reliance Communication, GMR that you mentioned. On fundamentals, now, honestly, there are better names to play the infra. And with respect to that, we have coverage on PNC Infra, KNR Constructions, equally positive on the new IPO, new kid with similar sector, Capacity Infra, or even the big boy L&T, which has got diversified business verticals, including infrastructure. And, you should stay, and in the real estate pack, you mentioned about HDIL. If you have a reduced recommendation, let me give this disclosure. We like Godrej Properties, Mahindra Lifespace, Shobha Limited, Prestige Estates, Oberoi Realty. And these 4 or 5 names that I mentioned, now in the real estate pack, have got very strong balance sheet, virtually zero debt, or in some cases there is cash surplus, as well as execution is par excellence. So, these names will give you return one-off, but once they start correcting, you have to be extremely careful because these are highly leveraged, over-owned stocks in the market, and there is a possibility that you might just get stuck with them.
Okay, and the stock that we were discussing before you came in is Dredging Corporation. Second day in a row, stock has moved up, and I think over the last 2 days, it has gained almost 25%. What's your call here?
So again, we liked the company sometime back. It has tremendous amount of cash surplus on the balance sheet. And all these Pradeep oil related, stocks, whether it is to do with, onshore drilling or high seas or ultra deep water drilling, and dredging happens to be associated with one of these sectors. It's a government owned company. The only problem I have with some of the government owned companies are that the government might just get up one fine day in the morning and say we are divesting, and that divestment, according to the history that we witnessed, happens at 5-10% discount, and the stock takes almost a lifetime to recover back to the cash market price pre divestment news. So, you're better off playing the exploration company sector. We like ONGC, Oil India, Reliance Industries. As a matter of fact, we are extremely positive. And if you want to play the crude oil theme on the downstream oil marketing side, HPBP, IOC, including again Reliance Industries, because they have retailing business of petroleum products.
This is not an offer for sale where, government will divest 10% at a lower price. This is the entire 73% on the block. And it's a strategic divestment. And if you look at the history, when government has divested a company, handed over the management to private promoter, they turn out to be multi-baggers.
Well, Pradeep, you are betting on a futuristic event to happen, and correct me if I'm wrong. I don't know what will be that valuation or what will be the share price of one single piece of share. So, and being a fundamental analyst, Pradeep, I always refrain from making any forward-looking statements because that might be deceptive. So if you want to bet on the government might get an extra premium, and there might be one particular private entity that will come in with a huge bag full of money and wanting to give that premium to the government, then so be it. But be prepared for some kind of disappointment in case if the expectations don't turn out to be true at ground level.
Okay, Gaurang, then are you willing to buy a Bhushan Steel or a Monnet Ispat? Because, every day there is at least one new bidder for these assets.
Pradeep, I don't advise and I don't risk money of investors. I advise on strong fundamental companies in the metal pack, and there are 6 of them, if I'm not mistaken: Tata Steel, Vedanta, Hindalco, JSW Steel, Steel Authority of India. JSPL was on our radar, but at 200 plus, our targets are in place, so we would not recommend any fresh buy. Bhushan Steel and the names that you mentioned, there have been news flows over news flows, and these are all, distressed assets. And distressed assets, Pradeep, according to me, do not command any premium in the market. Correct me if I'm wrong.
No, I think you're right, Gaurang, and that's a valuable point as well. So we'll talk about some niche ideas in a bit, but hang on, Gaurang. It's that time of the show when we get in some trade talk, try and figure out what are the stocks that might enter into the F&O ban or come out of the F&O ban. I think the last day of the calendar, the first day of the new series, may not be too long a list, but nevertheless, anything out there that is worth noticing?
No, you're right, Neeraj, because it's day 1 of the new series. Only one stock actually, which is, popped up in my list, and that is HDIL. The stock's also active in today's trading session. As of yesterday, the total open interest in the futures and options market as a percentage of the market-wide position limit was nearly 64%. And for a stock to enter into the F&O ban, it has to breach the 95% mark. And we've seen a lot of open interest addition for the January futures and a lot of option strikes for HDIL, which suggests that it may just be possible that it could enter into the F&O ban for Monday's trade.
Okay, let's wait and watch for this one. It's, well, actually, am I seeing it correctly? Let's get the stock price up on the screen, HDIL, and that's a sizable surge that we seem to be seeing in this one, 11.5%. That's a big move. Shrikant, if we haven't discussed HDIL already, any thoughts here?
I think HDIL is also recovering from its lows, and while looking at the prices of other real estate companies like DLF or Prestige and Oberoi, I think this one is also going to do well, because this one was the stock which has participated heavily when there was a bull run in all real estate stock. I am of the view that this stock has made a multi-bottom around 55 levels, and after that the stock is recovering back. Now the stock is into that momentum. The sector is also in that momentum. So even if we take a marginal, I mean to say a very minimum upside from current levels, then also we are targeting close to 77, 78 on the high side. On monthly and weekly basis, the stock has formed reverse hammer, which is a completely bullish formation for the stock. And based on that formation, we are expecting 77, 78 on the high side. So even at this price, I think it's a buy. If there is a positional view, then certainly one can buy even at current price. If there is a short-term view, then I think we need to wait because it is up by almost 10-11% in today's date. And if it goes into that band period, then it will correct in on Monday. So that time it will be an opportunity for those who would like to buy in cash segment.
Okay. And Sarvendra, there are 3 stocks, but I want to view on any one of those. You know, while large cap IT is doing what it is doing, there are mid cap IT names which are making a big move, touching new 52-week highs. L&T Infotech is 1, Tata Elxsi is 2, and Persistent, which for the last 2 or 3 sessions has been very active, is the third one, which is up another 2% today. So 3 names out there, mid cap IT, all of them touching new highs. One favorite out here, if you have one.
See, if I have to go at chart formations, I would say that even though, as I said, IT is one space that we would like to play as a defensive play in this correction. So all the 3 names, I think people can, especially the last 2 names, Tata Elxsi and Persistent, are looking much better and they are in regular coverage. So people can trade that. But out of the 3, because I've just chosen 2 to trade, the one that is the top pick here, probably as a pattern setup, is Persistent Systems. I think clearly a multi-quarter kind of a correction, a consolidation probably getting over, and the first signs, not the perfect signs, but the first initial signs of a breakout here. And I would say that this stock probably could do 760, 770 going forward, if not more. And if the overall long-term setups and the long-term counts go right, probably this could be challenging the all-time highs that it printed, that was around 900 plus. So I think 900 plus is also possible, but the time horizon will be 6 to 12 months here.
Okay, let's wait and watch what happens to Persistent or Tata Elxsi for that matter. But it's also time to look at what dealing rooms are recommending in the session today. And Yatin Mota and Darshan Mehta are here with their channel checks. Gentlemen, good afternoon to both of you. Yatin, let's start off with you first. What are you getting from your sources?
Neeraj, Idea Cellular, that is one stock which is buzzing on good volumes and price action. This is one stock wherein dealers are indicating a BTST kind of a strategy. So this is probably something that they are looking forward to as far as year 2018 is concerned. So Idea is one stock they are bullish on. Apart from that, Jain Irrigation is witnessing some weakness in the past few sessions, today down almost 1.5%. Dealers do indicate that there is some bit of selling which is happening as far as FI desks are concerned. And interestingly, watch out for Syntex Plastics. A couple of block deals happened here. Volumes also nearly 1 crore shares happening as far as this stock is concerned, up on good volume, 6% up for that one. Dealers indicate that HNIs are accumulating the stock for a 10 to 15% short-term upside. So watch out for Syntex Plastic in the mid-cap space. But Darshan has a few more stocks.
Yeah, so one of the stocks that has been spoken about is Gujarat GNFC, Gujarat Narmada Valley. So basically, some of the chemicals that the company deals in across globally have seen a big spike as far as the Chinese market are concerned. Formic acid, there is aniline. All these are some of the chemicals that GNFC manufactures. So this is one of the counters that is being spoken about. Secondly, some of the large FIIs are accumulating auto stocks. Maruti has been a hot favorite with one of them, again racing back to the levels of 10,000. But today, Tata Motors, which has been rather inactive over the past few days, has suddenly woken up. It's up 3%. So these two counters from the FII desk, we are hearing accumulation. And every day we are seeing some of the other brokerage come out with a bullish recommendation on Motherson Sumi. A lot of these domestic brokerages, including some foreign brokerages, are actively pushing Motherson Sumi to their clients.
Thanks a lot, Darshan and Yatin, for getting that dealing room check. Can we just pull up the intraday chart of Axis Bank? That stock's seen a sudden surge in the last 5 to 10 minutes. The chart of Axis Bank will come up on your screen. One of the top gainers on Nifty right now, and it's up almost 3%. Gaurang, any view here in the banking space? Would you bet on Axis Bank going into 2018?
Oh, definitely, yes, Navneet. And over the last year or two, when the entire underperformance was quite visible on fallback of extremely disappointed earnings, we remained positive on both Axis Bank as well as ICICI Bank, because these two leading private sector banks had issues to deal with on their balance sheet. Resolution is evident in terms of the last 2 quarter numbers, and going forward, we are quite sure that management efforts, concentration, and the NCLT/IBC that has been laid out by the government in terms of policy changes would help faster recovery of issues and asset quality. If I'm not mistaken, I think our target is about 640 on Axis Bank, 365, 385 on the ICICI Bank. These are all long-term targets.
Okay, 3:20, that time of the show when we should get in some top closing strategies from both our experts. Shrikant, to you first. If you had to do one closing strategy, a short-term BTST or STBT, which one would that be?
I think with a BTST point of view, Tata Motors looks really good. Today the stock is up by almost 3%, but the way the stock is going up with good volumes, and there was a pause in last 7-8 days. So I'm of the view that the stock has formed some continuation formation, and furthermore continuation is not ruled out. Maximum up to 440, 442. So at this price, it's a strong bet with a BTST point of view, and we can keep a stop loss of 425 for the target of 445 on the head side.
Right now, let's go to Delhi.
View as expressed by the members is he should not be allowed. And this was a gap which was there in the original bill, and by bringing in 29A, we have tried to fill in that gap. That's the object. And in order that this provision must apply to all existing cases of resolution which are pending, that's the case for urgency. And if we had not done this, all such defaulters would have rejoiced, because they would have merrily walked back into these companies by paying only a fraction of the amount. And that is something which, besides being commercially imprudent, would also be morally unacceptable. And that's the real rationale behind this particular bill, Madam. I commend this bill to this Honourable House for approval.
Yes, thank you. Is Premchandran ji?
Okay, fair call. Anyways, we were talking about some stock recommendations on a day when the markets are set to end at the highest point of the day. We got in a view from Shrikant, Chouhan. Sorry, Shrikant, we had to cut you while you were just finishing your point. Do you want to finish your point on your recommendation and the rationale thereof?
No, I was just talking about the BTST stock, that is Tata Motors, which is trading at 431. The stock has formed continuation formation, and based on this particular price formation, we are expecting 445 in the near term. So it's a great BTST buy at current price with a stop loss at 425 on the downside.
Sarvendra, what about you? Your top closing strategy?
Yeah, I would go with BPCL. We have recommended that on a trading positional side as well. But if someone wants to do that trade BTST, you can look for a target in the region of 510 for the next session, which is next year now, and keep a stop loss there at 518.60 on spot prices.
These are the BTST or STBT ideas for you, but look at what's happening to the Nifty Bank, and also Nifty has in fact benefited by this move in the bond yield. Actually, Nifty Bank has recovered in last 10-15 minutes, as you can see. And if we could get you the chart of Government of India 10-year bond, that will also tell you that bond yields have corrected quite a bit, almost 10 to 11 basis points from the day's high, if you look at it. And the sudden fall that you see is because of what RBI has done today. They have not accepted any bids in certain segments, and therefore while there was a planned auction of 15,000 crore rupees worth of government securities, the actual auction has been only for 4,000 crore. That's government's or RBI's way of signaling that yields are too high, and therefore they are not willing to pay that much interest in any auction. So that is the reason why bond yields have corrected, and that's a good news for markets, because 7.4 was really unsustainable.
Yeah, and The clear impact has been seen on Bank Nifty post that news because it did breach the 25,500 mark, but it's back above that. In fact, trading firmly at 25,550.
And you know what, Navneet? If indeed we close at these levels, 10,533, we'll be closing in the year at the highest closing levels. And we're just trying to figure out, I don't remember many years wherein the index has closed at the highest closing level on the last trading day of the year. I don't remember when it happened last, maybe 2007. But aside of that, I don't remember closing in at the highest. Typically, December used to be a slightly lackluster month. But this might be it. So 10,532, I think, was the highest close on 26th or thereabouts. This might just eclipse that. Let's wait and watch.
So we'll be closing on a high note and at around the all-time high levels. Goran, good year for equities, but going into 2018, what are you betting on? What are your top investment bets?
And Gaurang, don't give us 15 names.
You know, Neeraj, people always complain that I give out very few names. So,
really?
Okay, I'll stick to what you have told me. Yeah.
Oh, no. So let's try and change that out here at Bloomberg Quint. Let's try and give people actionable names, something that Gaurang Shah really believes in. I mean, I'm sure you believe in almost all of the ideas that you give, but something that you have top conviction on.
Yeah, I think conviction and confidence are the two things that any fundamental analyst needs. So 3 investment ideas from 3 different sectors, if you will. First is the consumption-driven theme, which is very close to our hearts, and that is Godrej Consumer Products Limited. We have been tracking this company, I beg your pardon, for a very, very long time. 1250 is the long-term target, and you know, Neeraj, the amount of traction that I have seen at ground level in terms of demand from semi-urban and rural India, and that's amazing. That's going to drive the FMCG sector, and more so Godrej Consumer Products Limited, because it is not only present in India, it has acquired some niche and marquee brands in the overseas market, and they have their global footprints very firm as well. Hence, we are extremely positive on Godrej Consumer Products Limited, 1250 target long term. Next one is a company from the alternative fuel / clean green energy and environment. Gas related company, Indraprasth Gas Limited, has been a stellar of a performer over the last year and a half, and the run rate continues and improvises even going forward, given the capex that the company has lined up, and of course the government focus and policy in terms of improving the infrastructure and laying pipelines for getting that required distribution network. 435 is the target on IGL. The last one is Bharat Forge from the auto ancillary. Fallback of both Class A truck orders, domestic market as well as defense. 920 is the long-term target on Bharat.
Wow. Okay. Those are some interesting names. Safe as a house, really. Almost all of them largish names, if not large caps, then large mid caps. And that's something that you wouldn't probably go wrong with too much. Okay. Thanks a lot for that, Gaurang, for some of those ideas at least. What's also closing in at its highs is Jet Airways. Now, crude may be doing what it is doing, but Jet has had a phenomenal move. I think at 832, it's closing in at 52-week highs, if not life highs for itself. Shrikant, any thoughts here, Jet Airways?
Neeraj, it is a completely outperforming stock, and the way the stock has moved up from 440 to almost 813 in just a few months, I am of the view that the stock is forming a rounding bottom kind of formation on a monthly basis, and this one is going to outperform heavily in next maybe a few months of time. So the previous high was close to 1350, 1400 levels, and the way the formation is there, the way the volumes are there, I think I'm of the view that the stock is heading for same levels in next maybe a few months of time. So it will take time, 3 to 6 months, but certainly it's a best buy. Along with the Jet Airways, if you go through the pattern of escorts, then the formation is similar, and there also we are expecting a huge amount of appreciation in next few months of time.
Okay, let's start wrapping up the markets, gentlemen. The final market wrap for the current calendar. Pradeep, let's start off with the large caps.
Yeah, so with that last minute support coming in from Nifty Bank, which is up around 50 points, all set to close at around 25,500 or above that mark. All the indices are actually going to close, very, very close to the year high. Nifty above 10,500, Sensex above 34,000. So these are some record levels that we are seeing on the last day of the current year. BSE small cap index, but look at it, 122 points, almost half a percent or 2/3%. And Nifty small cap 100, if you look at, is up almost 1%. These indices are actually at record high levels, and they have outperformed Sensex and Nifty, and that run in small caps continues even on the last day of trade. Now, interestingly, if you look at the breakup of Sensex today, over last few sessions, we had more losers than gainers, but today on the last day we have more gainers here. Tata Motors DVR, Hero Moto, so this is one sector which has done well. Even Maruti is there, up 1%. Bajaj Auto has gained almost 0.75%. You also have IT names like TCS and Wipro doing well in today's trade, and Axis Bank has recovered up 2.5%. HDFC is up 1%. So private banks are also supporting the index. Interestingly, however, you also have ICICI Bank and IndusInd Bank not doing that well. Some correction in Tata Steel, DRL, and most importantly, heavyweight RIL and HDFC Bank are down, but down just marginally, so not really affecting the overall performance of the index.
Well, Pradeep, it's curtains down for 2017, and we've ended the year on a high note and high spirit, so to say. So let me start off with the new kid on the block, and that's Ashton Paper, which had a good listing today. In fact, the stock was locked in upper circuit with good gains that one had to see on day one for this counter. Anil Ambani Group stocks have been active not only today but throughout this week. So look at Reliance Communication. Today also it surged nearly 17% in trade, and the rub-off effect was actually seen with the other companies as well. So Reliance Power saw good gains coming about in today's trade, up almost 12%, closing around the day's high levels, almost around 50. But the other over-leveraged companies from the likes of JP Associates, that too gained in today's session. So that saw gains of almost closer to 13%. HDIL, which could just enter into the F&O ban, that counter was also active, up about 11% in trade. And you also had GMR Infra, which did well today. So that also saw great gains, so to say. But Idea finally closed the year above the mark of 100, around 108, 6% higher for today. But this was the counter which saw a lot of correction post that deal with Vodafone was announced this year, but great closing from those lower levels for Idea. Indraprastha Medical Corporation, it's a company we don't talk about it every day, but it did close on a high note with 13 to 14% gains, and paper stocks were active. So Balkrishna Paper was up and about. Two stocks which did not do well, Infibeam, right from the word go in the morning, saw very deep cuts. That was down today, and MCX was down almost 2.5 to 3% in today's session. Neeraj.
Well, and that sums up the day, the week, the month, the year, and it's been a fabulous year for sure. 0.5% for today, but I mean, and today's analysis is separate, but at 10,530. These are exceptional levels that we are closing in at, almost at life highs, and on terms of closing basis as well, which is actually pretty good. And then you do a bit of a rewind into what the year looked like, and you would see that it is essentially dominated by metals, by real estate, by consumer durables, and to an extent banking. I think all kind of banking spaces did very well. This is for the year as a whole. And if you look at the gainers, Bajaj Finance topping the list. I think the camera will need to come in a bit, but Bajaj Finance topping the list. Then some of the metal names as well. Tata Steel amongst others right up there. Vedanta is amongst the top gainers with about a 52% gain. Hindalco is somewhere out there, 75% gain. Maruti, the big boy, nudging the 10,000 mark in this current calendar. In a manner of speaking, amongst the large cap names, Maruti stands out, but it's been a fabulous move for Maruti as well, 83% for this one. And Reliance Industries, the big boy, participated, 70% gains for the mammoth market cap that Reliance has. That's great. And as you can see, what a good year was, that amongst the worst performing stocks as well, we have 4 stocks which were gaining, and except for Pharma and Coal India, we didn't have too many losers, which is actually the highlight of what this year did. I just want to bring up a couple of more indices. One is the Nifty 500 if we can, or actually some of the best performing indices. So S&P BSE Realty, India Realty Index was the best performing index amongst all the sectoral indices, better than consumer durables as well. And look at the kind of performances that have come in. The worst performing stock, and HDR is separate 9%. Otherwise, the worst performing stock has actually doubled or 50% returns, which is Omaxi. So good going really for the real estate space in this year, as also for the consumer durable space, which has actually done rather well for itself. VIP, Titan, PC Jewelers, Bajaj Electricals as well, doing very well. The worst performing stock, TTK, which is also up about 34%, which are gains that you will take with both hands, to be honest. Yes, there have been losers, but I think it's a year that has belonged to the gainers, even at the broader end of the spectrum, even in the metal space. Coal India may be an exception, but all the other stocks did very well. At the broader end of the spectrum, if you just pull up the small caps or the Nifty 500, you will see the quantum of gains that have come in for certain stocks, northwards of 1,000% in cases like HEG, for example. It just shows the kind of strength that we've had in this year gone by. Let's try and wrap up this segment by asking final questions to all our experts. How does today set us up for the next week? Shrikant, I'll start off with you.
I think, see the way today the market closed, and you just mentioned that like market is closing to the highest point of the overall rally for the year. And if you go through with the pattern of or the trend of 2003 to 2008, every year the market closed to its highest point of the year. So it's not like something new to the market, but yes, whenever there is a bullishness in the market, it closes highest point of the year. Yes, for the next week, I'm expecting 10,600 as a very strong hurdle for the market. I'm expecting market to correct up to 10,400 first, and then again rally to maybe 10,800 or 11,000. So initial weakness is not ruled out.
Okay, an initial weakness to 10,400 and then a recovery. That is what you are actually looking at. But what would be your favorite trade, Sarvendra, in New Year?
Yeah, I would like to take this opportunity first to wish everybody a happy 2018 in advance. And as I said, I would not be one of the guys who will be delivering the good news. I think that 2018 could be a year initially of the first half could be painful, and the January cycle could turn the tide. Looking at my proprietary readings and the kind of setups I do, I am a devil's advocate, but that is what my job is. I've been doing it.
So what's your favorite short, Sarvendra, in New Year?
Yeah, I think my favorite short for the new year would be Bajaj Finance. I think it's closed on a quarterly bearish harami, and it has completed a secular run for the last 7 years, and that stock probably could fall 20-25% minimum. So if I have to pick a top sell, in fact I have a lot of sells, but yeah, one name that comes to my mind is Bajaj Finance.
Okay, and Gaurav, what about you? How would you sum up to 2017?
I think great year in terms of return on the Sensex stock specific, as Neeraj, Pradeep, and you were listing down in terms of percentage. And I already made a disclosure in my opening comments that I expect 15-20% return in 2018. The tide would be a little bit rough and tough and volatile, given that you have 8 states that go into election. And starting the year, Jan, Feb, I think we are going to be driven by first Q3 earnings, and then my all compliments to the Honorable Finance Minister that he will use his wisdom, he will use his experience to walk the path of righteousness and not to open up the purse strings and give out goodies just to attract the vote bank. And I think he has done a commendable job with the last whatever budgets he have presented, and I think he will use the same wisdom this time around. Volatility and turbulence may come in form of state elections as they approach, as and when the dates are there, and of course, respectively, the outcome of the respective state elections. But having said that, I think there is life beyond 2018 and 2019, and I'm quite sure that we are in for a steady upside, barring some odd days and months and weeks of correction. That will be a great opportunity to buy.
Okay. Gentlemen, all of you, thank you so much for being part of the show today, as also over the last few months. It's been a pleasure talking with each of you, and wish you and your families and your teams a great 2018. All right, just before we take that break, I think Jayesh has just sent a data point, guys. It's 2,342.95 points in 2017, the biggest point gain ever for the Nifty. That's a strong year.
Definitely, no doubt about it. But in percentage terms, not so. That is what we discussed earlier. So, but at these levels, definitely, it's a big move. And that is despite FII selling for most part of the year.
Yeah, that
This is the first domestic fuel rally, I would believe.
Maybe it just marks the advent of the retail investor for India. Anyways, we'll talk about all of this and more on the other side of this very quick break. Stay tuned.
Are we live? Welcome to programming that's insightful, authoritative, and at your fingertips.
Bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg Terminal, accessed only by over 325,000 marquee investors across the world until now.
Business news, we're news for business people.
Welcome back. You're still watching Countdown with us on Bloomberg Quint. Well, the European markets are seeing a mixed start to the final trading day of 2017. Bloomberg's Chouhan joins us from the London studio with a complete update on all the action there. Hi, Chouhan.
Good morning. It's the final trading day of 2017. Good morning from London. Now, while it's been quite a year for global equities, today European markets are just struggling to find direction to how to spend the year going out. Now, we're about 2 hours, 10 minutes into the session. Stocks broadly flat around the continent. Bit of positivity here in London. The FTSE up some 0.2%. Italy stocks down by 0.4%, but broadly unchanged around the continent. Of course, very low volumes today. A lot of traders rather sensibly deciding to stay at home, continue the festive cheer and not come into the office. The volumes about 50% lower than we'd normally expect for this time of day. Now, the dollar, meanwhile, it's heading lower. The Bloomberg dollar index down for a third day. It's been quite a negative year for the dollar this year. The greenback heading for its worst annual performance in more than a decade. The euro in positive territory today. It's looking set to cement its best year since 2003. And something else on quite a tear today. The Bloomberg Commodities Index, it's up for a 12th straight day. That's its longest winning streak on record. That's as WTI crude oil heads above $60 a barrel. Oil also on course for a second annual gain. And that's it for me for 2017. Have a good new year.
Yeah, to you too. Thank you so much, and have a great party this weekend as well. Thanks a lot for joining in today. Anyways, on our last edition of our special series, which is Multi-Baggers of 2017, we'll feature Rain Industries. Stock has gained up over 6.5 times in a span of 12 months. Darshan is standing by to tell us all about the company and why did it did what it do. Why did it do what it did? Sorry.
I think you're getting ready for the party, ahead of the party, Neeraj. But yeah, this is what Rain does. Lots of businesses. First of all, this is the main one. That is calcined petroleum coke. There is coal tar distillation, specialty chemicals, and has 2 cement plants in India of almost 3.5 million tons per annum. So this is what it does. Has a lot of presence across, their products cater to a lot of industries. The biggest one is aluminium. There is auto, chemical, construction, steel. So significant amount of exposure that they have to several sectors. Now, mainly the biggest is CPC and coal tar pitch, which is used in making aluminium. So basically, this is what they make. Calcined petroleum coke and coal tar pitch are used to make anodes. Anodes are used in aluminium smelting, which is finally used to make aluminium. So there is significant amount of traction in the aluminium market, which led to the big surge that came in. Now, what are the main reasons for the surge? Basically, the restructuring is done. They had bought in a lot of leverage buyouts. Rutgers was one of them. That is done. Now they are focusing on deleveraging. So the interest rates, the recent loan rates that they have negotiated are at 5.2% versus the earlier 7.5%. So that is a positive, which will help them reduce their interest cost significantly. How are they creating shareholder values? They have 2 businesses. India business is the cement plants. They're paying dividends out of that. And the global business, which is Rain Carbon Global, they are paying debt out of that. So that is what they're doing in terms of reducing the balance sheet. Now look at the financials. The financials have played a big role. From 2015, their turnover was 2,600 crores. They did almost 9,500 crores in 2016. And since it's a calendar year, they did almost 8,300 crores, which is much more than what they did in the 9 months compared to almost 2015. Look at the EPS, and from EPS has actually moved on much higher than what it was. So clearly there is a lot of traction and margins have moved up significantly. What are the big triggers? First of all, CPC prices are trading at record highs. That is a positive. No capex in the near term. They are focusing on debt reduction. There is significant amount of strength in the metal sector, and the dependence has reduced on aluminium to value added products. And bond prices of Rain Industries, which were the 2018 bonds and the 2021 bonds, have seen a big surge. Also, what has yet to be played out on Rain Industries is the fact that the US tax cuts will be played out. That could be the additional kicker for Rain Industries. What are the concerns? High debt. They've done a lot of leverage buyouts. So if there are more leverage acquisitions, that could be problematic. Turnaround in the business cycle, remember, it's a cyclical business. And finally, valuations are no longer cheap. It's trading at 13 times. When Monish Babrai was talking, they were trading at much lower valuation. Now it's almost 13 times. But these are the major factors that have played in the big surge of Rain Industries, almost 6.5 time jump in the matter of just 1 year.
Well, thanks a lot for that. And speaking of Monish Babrai, let's hear out his rationale about Rain and his outlook on the company ahead.
Equity markets have this habit of not being smooth, right? And so Rain was an example, extreme example, because it sat doing nothing for 18 months and then, went wild and crazy, if you will. I had a certain understanding of the business before I made the investment. And most of that understanding was because someone sent me a very nice report on Rain, and it made it obvious. In fact, basically based on that report, the price I was paying for the stock in 2015 was likely to be the earnings of the company in 2018 or 2019. So I was basically buying in 2015 at PE of 1 in 2018 or 2019, and it was a profitable company. So anytime you can do that, you don't need to think about it too much. And so I thought at the time before I bought Rain that probably in a 5-year period, we might make somewhere between 5 and 10 times our investment. So it was a very obvious no-brainer type investment. I tried to buy every share I could.
Sure.
And in the last 2.5 years, I've spent more time, obviously it's a long time, and I spent more time studying the business and trying to understand more about it. It's a complicated business. They've got 3 different divisions and all that. And I've gotten a reasonably better understanding than I used to. And what I've concluded is the moat of Rain is a wider and deeper moat than I had originally anticipated in 2015, and it has better management than I had thought they had. So many things about the business are better than I originally anticipated. Now, just about, I think, 4 or 5 days ago, I was in Beijing, and the skies were clear blue skies, and a number of Rain's competitors are in China, and something like a third of them have been shut down by the Chinese government because they're very serious about pollution. Rain got some extra tailwinds, which I had not anticipated from, for example, the Chinese government action. So I had no idea about that in 2015. It got an extra tailwind because now the US has changed, the tax rate has gone down dramatically. So a few more tailwinds have emerged for the business which were not present a few years ago. And I just told you, fairly priced, overpriced, egregiously priced. So my take on Rain is to give it a little more rain, if you will, and let it run a little bit, and we'll see we'll see where we end up. But I think my sense is it's got some room to run.
Yeah, okay, but this is, remember, again, I started
but it's not a stock tip. I wouldn't be buying at present prices, but I'm just not willing to sell at present prices.
Sure. I just wanted to know that buy and sell.
I would not recommend Rain as a screaming buy at this point.
Perfect.
All right, moving ahead, the government today issued a warning on cryptocurrencies, raising concerns over the recent spike in prices and general virtual currencies like bitcoins. Well, the Finance Ministry in its statement says there is a real and heightened risk of an investment bubble similar to the type seen in Ponzi schemes. Nikunj Johri joins in for more on this. Nikunj, is this the second time that the government has given this sort of warning?
After repeated warnings issued by the Reserve Bank of India, the government has now stepped forward and cautioned people not to invest or trade in bitcoins and has equated virtual currencies to Ponzi schemes. In a statement issued Friday, the Ministry of Finance has said that virtual currencies are not backed by any assets and their price is a mere speculation which leads to volatility in its own prices. Remember, the RBI had recently recently said that there's no entity that has been authorized by the RBI to act as an exchange for trading in virtual currencies like Bitcoin. Remember, the value of Bitcoin has surged 1,700% in the current financial year, and the Indian government has also constituted a committee to look into various aspects like regulating virtual currencies. The committee has representations from Ministry of Finance, Department of Revenue and Department of Economic Affairs, SEBI, RBI and other government agencies. The mandate given to this committee is to regulate, to look into regulating virtual currencies and looking into various aspects like taxation, money laundering and consumer protection.
So why is the government so worried? Well, if there is one financial instrument that's beaten equities, it has to be cryptocurrencies. And if you are dazzled by the Bitcoin rally, well, here's some news for you. There's another virtual currency that's beaten Bitcoins as well, right, Yash?
Bitcoins have been all the rage in 2017, and how to buy Bitcoin has been the third most searched Google query in the world as per Google Trends data. So is it really the king of cryptocurrencies? Well, not really. So as per the data that we have over here, Ripple has in fact given a much higher return than Bitcoin, leaving it in the second place quite comfortably, as you can see, giving in a return of almost 19,748%, followed by Bitcoin, which comes in at 1,376%, Litecoin with 730%, and Ethereum, which comes in at fourth with 136% return. Also, well, it may have been the second most return potential giving cryptocurrency, but the ride is more important, and the ride was not that great for the cryptocurrency. And as you can see, in September it had fallen almost 25% after China decided to crack down on Bitcoin exchanges in the country and banning them from operations. But from then it had crossed almost $7,000 a pop for the first time in November 2nd, and from there it just started to rally, and it has been a dream run for the cryptocurrency, more than doubling in the space of just 1 month, going from 7,000 to 15,000 as of December 7th. The Bitcoin futures started trading on the CBOE and the CME, which is the largest derivatives exchange, and in between again it fell almost 25% in the 7 days going up to December 15. And fast forwarded to yesterday, which is December 28, South Korean agencies have decided to crack down on cryptocurrency exchanges, tightening their norms and also considering the proposal to ban them. So with that said, in the process, a lot of records were also broken. And as per the data that we have, as of December 28, the market cap of Bitcoin stands at 15.5 lakh crores, which is greater than the market cap of two of the largest Indian companies, which is Reliance Industries and TCS, both put together. But that's that in Indian markets. In the international markets also, when it had touched the highs of almost $18,700, the market cap of Bitcoin had crossed the $300 billion mark, making it more valuable than retail giants like Walmart, Visa, wireless service provider AT&T, chip maker Intel and Citigroup.
Thanks for that, Yash. That's an interesting piece of analysis on Bitcoin. And actually, you know what? CME and CBOE introducing Bitcoin futures, Neeraj, actually it gave a platform to traders to start shorting it, because prior to that, there was no room for shorting this, and you know what? There were a lot of analysts who called it a parabolic move, which means that there were actually no sellers in the market, and that was the reason it was going up. By launching futures, I think it's just given them a platform to short it, and precisely that was the reason why in the last few days we've seen some sort of correction coming for Bitcoin.
Yeah, but well, if the Bitcoin numbers look very stellar, the index numbers may not look as stellar, but tell you what, 28-29% in a year is not bad at all. What have been the sectoral gainers this year? Jayesh Khilani joins in with the details. Jayesh.
Neeraj, stellar rally coming in for the Nifty with the biggest point gain ever that it has seen for an individual calendar year. So 2,300 points, or just more than that, has been gained alone on the Nifty. If you look at the percent change, the broader indices, Nifty has gained about 28.6%, while the Sensex has given you a return of almost 28%. But it was a year of the mid caps and the small caps. Have a look at how the Nifty Mid Cap 100 index has done. That's nearly 47.3% return on the mid cap index, while the small caps have given you in excess of 55%. Now, you know, the India Volatility Index you were speaking about in the morning, that has come off, declined about 19 odd percent, which is the biggest decline that it saw ever since 2012. As far as individual sector gainers are concerned, have a look at this. The Nifty Realty Index more than doubling for itself. The only sector index which has actually doubled, and you have to bear in mind that, you know, this is on the back of coming out of demonetization, GST and RERA being implemented for the real estate space, and you know, clearly the winner over there for 2017. The Nifty Metal Index was the other winner on the back of the commodity rally, and some of the other indices also, you know, the infrastructure space and media, auto, all of them gaining more than 30% for the index itself. The only small spot, or the outlier, if you may, was the Nifty Pharma Index, which has seen a decline of about 6% in the entire year. So Nifty FMCG and PSU Bank, IT just a tad bit underperformed, up about 12.2%. But the other outlier that I was talking about, that should be coming up on the screen, Nifty Pharma, the sole index which has ended in the negative for the entire 2017, Nifty Pharma down about 6.3%.
Thanks a lot, Jayesh, for bringing all those details as to how the year panned out for Indian equities. Let's move ahead. 14 people have lost their lives and many others are injured in a major fire that broke out at Kamla Mills complex in Mumbai. The fire broke out at a restaurant and spread quickly to adjoining establishments. The building also houses a number of news organizations run by the Times television network. The Quint's Almaz Khatib sent us this report just a short while back.
I'm here at the Kamala Mills compound where you see that there are still fire trucks and police vans that are still trying to gauge the damage done, the damage caused by the fire that broke out earlier this morning at a birthday party at a place called One Above and a restaurant next to it called Mojo's Bistro, which have been charred in the fire. The death count at the moment stands at 14 individuals and several are still critically injured. The FSI, the floor space index, that has been flouted in a manner that buildings have come up way too close to each other, which is why the fire reached the Times Network building, as you see, which is not even close, which is sort of close to the restaurants, but not so very much. It's almost adjacent to the restaurant. And at the moment, we've had a Congress MLA and a BJP MLA come in and speak to us about what happened over here this morning. And all we know at the moment is that the FSI was flouted extremely in a manner that 2-3 restaurants came up in the space of one, which led to the massive fire this morning.
Well, that was a massive tragedy which took place last night, and certainly we're ending the year not on a very good note with this tragedy which took place in Mumbai. But I guess with that, it's a wrap on this edition of Countdown. It's goodbye from Neeraj and my side, but don't go anywhere. Coming up next is Thank God It's Friday with Rupesh Patel of Tata Asset Management. Stay tuned to Bloomberg Quint Live.